Well, first home buyers are getting approved for home loans in record numbers. New figures have revealed 70% of people who were trying to get into the market were successful in July, up from less than 58% at the same time last year. Joining me now live is Sophie Elsworth, News Corp national personal finance writer. Sophie, good to see you. Thanks for joining me.
No problems, Danica.
This is excellent news. Take us through these figures.
Yeah, it's fantastic news, Danica. Look, we're, just entered spring. Spring selling fever is in the air. Now's a really good chance for first home buyers to make the leap into the market. So the results out today showed that as of results that were done on first home loan applications by digital financial analytics, it found that 70% of applicants in July that were first home buyers were successful, compared to 58% last year. So more are getting the green light from lenders to actually move through and go through that process of buying a house. So it's fantastic that so many are actually saving up deposits and trying to break in to what has been a very tough time in the property market for many years.
And what seems to be behind this increase in approvals?
Well, look, there's lots of moving parts in the situation out there in the property market. We've got interest rates at record lows. Just last week, we've got unemployment figures higher than usual. Investors have sort of subdued. The property price amounts have come down. So these sort of various things are making it a pretty good time for first home buyers if they are in that position that they have a 10 or 20% deposit saved up at the very least, that they can make the pounce, because prices have come down in many cities, particularly in Sydney and Melbourne, which is making it a really great time for them to jump in if they can.
The research also found that the majority of recent home buyers revealed that they're planning to use the federal government's first home loan deposit scheme. Can you take us through the scheme itself?
Look, this is a really interesting incentive that's been rolled out by the federal government. So it starts on January 1, and basically it means for first home buyers that do not have a 20% deposit, they have to pay lenders' mortgage insurance. Now, this is really expensive. This is an insurance that can cost tens of thousands of dollars, and it's one that protects the lender, not the purchaser, if they default. But what's happening under this new scheme is that the government is going to basically back that amount that the first home buyer has saved up. So say they have a 5% deposit, the bank will support them in guaranteeing the 15% that they don't have. So basically letting them come up and going to the lender and saying, look, we've only got 5%, but we've got the government backing behind us to say that we don't need lenders' mortgage insurance, but we can take the leap into the market.
And Sophie, who is eligible for this?
So, look, not everyone can get this, of course. So it's available to singles who earn up to $125,000 per year, or couples that earn up to $200,000 per year. And it's only available to 10,000 people per year. So, look, basically, there's a few criteria there that you have to meet. But if you do not have that 20% deposit, this is a great way to save yourself some serious money. So I would definitely be applying for it once it begins from January 1.
Another interesting part of this research revealed that 1 in 3 people said that they plan to sell within just 5 years. What do you think this says about the changing attitudes of first home buyers?
Look, I found this really interesting that so many first-time buyers, now remembering there were 1,000 that were recent first-home buyers that purchased in the last couple of years and 2,000 prospective first-home buyers. But it's showing to me that first-home buyers making the leap are prepared to flip property. Now, I err on the side of caution of this, Danica, because it's expensive to flip property. Yes, it's great if you get good capital growth, but stamp duty bites very hard and stamp duty is expensive. So, I'd be careful of going in with the attitude that you're going to have a property that you're going to flip in a few years. Ultimately, homeowners hold on to their property for some time and see some price growth. Typically, homeowners stay in properties or have mortgages for about 7 years before they refinance or make some sort of movement. So I think it's showing that first-home buyers are actually keen to get in, but then they're keen to progress up the property ladder as they can.
Just finally, Sophie, what would be your advice to these potential first-home buyers?
Look, Danica, the best thing first-home buyers can do is to save really hard. You know, stay away from ordering those food delivery services to your houses. You know, the coffees are only a small expense, but when you purchase all these discretionary items, they add up. So I'd be saying to them, absolutely try and save a 10 to 20% deposit. If you need to ask, you know, a family member for help, you know, perhaps you're lucky enough that you can ask for that arrangement, great. But ultimately, if you have that good savings record behind you, that's fantastic. But remember, banks are absolutely drilling down into your spending. So if you're going to apply for a loan in the next 3 to 6 months, I would be cleaning up what you are spending on that's going through your bank account. Because if the bank sees that you're buying things like Uber Eats, you know, endless coffees out at bars, they will be wondering, can you afford that loan?